But today's topic is bullish strategies and how to create your trading plan. And I have with me Akshaya Bhargava, our chairman and founder, and he will walk us through that. And I see people still coming in. So Akshay, maybe we could start with you just saying hello, but I can see people just still coming in. But please keep the questions coming on the chat, and we will keep taking them as we go along. But we'll also ensure that many of those questions that need everyone to know the answer, we'll take it up right at the end, and will be a demo of the app as well, so that you know how to use InvestorAi. So Akshay, over to you, and welcome everyone, and we'll chat soon.
Thank you very much, Shruti. My own welcome to all of you. I see a number of new faces and a number of familiar names. So again, welcome back if you've been with us before, and welcome if you're coming and joining us for the first time. I don't know if Prabal is here, but I think he needs to join back. But once he does, I will ask you a few questions just to set the context. But today's session really is going to be about a bull market strategy, what you can do and how you should think about it. I will talk to you a little bit about how different people think about bull markets. I will talk to you a little bit about how I think about it. I will talk to you a little bit about InvestorAi. I'm not here to give you a lesson or teach you anything. I'm here to share information and hoping that you will be able to come to your own conclusions. In that, I find that is the most effective way to learn. If people work it out for themselves, and that is extremely important concept for me, as some of you may have heard me talk about the notion of U plus AI. Today's session is on bull market strategies and how to think, how to go about creating your own. And it's really creating your own that's the important thing. You can learn from textbooks, you can learn from people, but ultimately, you have to do it. For those of you who read Hermann Hesse's version of Siddhartha, it's a very beautiful phrase. He says that he tells Buddha that I know you're a great man, I know you're full of wisdom, but I cannot learn your wisdom. I have to learn my own wisdom, which I think is a very important concept. So let me just share some wisdom from people, if I can term it that. So some of you may have heard of Paul Samuelson. Paul Samuelson was a very famous economist. He won the Nobel Prize. He wrote a textbook. So when I was at IIM, and at the school, at university, Paul Samuelson's textbook was like Bible, you learned everything from there. And he said investing should be like watching grass grow. If you want excitement, go to Las Vegas. Now, again, I don't know if I totally agree with that. But many of these concepts are rooted in the old world, where markets had cyclical patterns, they went up and they went down. Now, these days, the volatility of the market has gotten so much, the velocity of movement has gotten so much, and the speed at which things change has gotten so much different. So some of these statements feel out of context, but I nevertheless found it a very interesting statement. The second piece of wisdom that I want to share with you is from none other than Warren Buffett, where he says, when we own a piece of an outstanding business run by outstanding management, our hold period is forever. So now he's violating the fundamental principles of investing that, you buy and you never sell. How is that possible unless you have unlimited money? So again, I find this a little extreme view, but it's an interesting view that if you find a good company, and again, it depends on what is your investment strategy. If your investment strategy is in and out, then this thing is never going to work for you. If your investment strategy is to hold and build a long-term portfolio, then this is a wonderful strategy. I mean, forever is simply a notion, but there's no reason to be getting out of a good business just because the price has gone down. Because anyway, so this is another piece of interesting wisdom. And the third piece that I want to share with you is again Warren Buffett. And he says wide diversification is only required when investors do not understand what they're doing. And this, to some extent, is true. A lot of fund managers, for instance, will say that we are diversified. I met an ETF manager, a very big ETF company in US, who has an India ETF consisting of 330 stocks. I said, Baba, you bought the whole market. Then why not just go buy the index? What is this ETF? Why are you charging any money for it? So, I think, and he said, no, we need to be diversified, and gave me a long story. I did not sort of believe any of it. I think he was just being lazy. So, diversification is sometimes an excuse for not being focused and, simply, buying the index and a way to charge a little bit more money. So I think, there are 2-3 concepts embedded in all that I've said. That, there is a long-term buy and hold strategy. Find a good company and sit on it. There's another notion here that concentrated holdings are better than. And if you look at large hedge funds, they have all made money on, 10, 15 very big movers. Bailey Gifford, which is a very large UK fund in Scotland, they made 80% of their money on Tesla. They were the very early entrants in Tesla. They kept buying, and of course, Tesla went crazy. So, they claimed themselves a very successful fund, but they made one good bet. The rest were average. So, this is how life is. Some things are going to work out brilliantly. There are a few things that are not going to work out at all, and most things will be somewhere in the middle. Anyway, moving on, how can InvestorAi help you? And I will explain all that in a minute. It can help you find value stocks. There are algos called value investing and new age themes. You can find short-term opportunities in Alpha 330 and swing trades. You can get analytical information from technicals and fundamentals, and you can monitor anything that you like. Quarterly results and active monitoring. So I'm going to show you all that in a while. But let's get back to what we were talking about. How do you create a strategy? I think it's about, number one, forming a view of the market. If you don't have a view of the market, please don't invest, because then investment is simply not for you. You have to form a view of the market, and then you can find good stocks that match your view. There is nothing like a good stock in absolute. There is only a good stock for you, and only you can decide what that might be. Okay? So, and finally, it's about being disciplined and being regular and having a cadence to what you do. So let's talk about each of them. Now, forming a view of the market is really up to you. You have to read a lot. You have to chat with people who have similar views, are similar to you, who you respect and trust. You have to join webinars like this where you can hear other people talking. You have to, so you have to make the effort. But once you have a view of the market, what is a good stock is not an easy question to answer. Okay, there are people who like growth stocks. There are people who like stocks with good fundamentals. Infosys forever has, been an inspirational leadership team, at least used to be. There are very low volatility stocks. There are names that I know well. There are companies that are coming up with innovative products, and so on and so forth. So, there are many, many definitions of what is a good stock. And it is entirely up to you to figure out what matters to you and what does not matter to you. I met somebody recently who said to me that, capital structure does not matter. It's a large cap stocks. The company will never go down just because it has more leverage. Has no meaning, and it is just simply an analyst notion that does not impact price. He could be right, he could be wrong, and it is his view. Similarly, you have to have a view on things. I personally am more of a momentum player, and I have a little bit of value kind of a thing. So there are some stocks I really like. which I have bought, and as long as I believe in the companies, I'm not going to sell. Then there are some stocks I'm buying only for a short-term gain. And I think, nobody is really a pure value investor or a pure momentum investor or a very, there are day traders who don't do anything else. That I understand. But most people have a little bit of value investing in their strategy and a little bit of momentum investing in their strategy. So so what do? I look for three things. I look for a good company, so it must have good fundamentals. It must be growing. It must be in a growth segment. It cannot be in a declining industry. So if you're in a declining industry, there's no point being the best stock. So this is like sitting in first class in a plane when the plane is going down. You're going to die just as well as the economy guy at the back. Okay, so there's no point having the absolute best stock in a very bad industry. So the company has got to have good fundamentals. It's got to be, I've got to believe it's a good company. Secondly, I must understand the company. So, I personally have a very good understanding of financial services, technology, retail, and a couple of other industries. I don't really understand technology. So in the last 2 weeks, there has been so much up and down on technology stocks. I read a lot, but I never bought anything because I just did not feel comfortable making a decision. I don't know enough about the industry. So having a good understanding of the company, and in all this volatility, question is, which are the 5 stocks that are going to do much better than others? I realized I did not know enough about, what makes a successful company in the energy industry in today's market, which is going crazy. Now, you could say it is Mr. Putin doing mischief, and creating short supply fears and driving the price up and then offering to come in and bring it down. And that could be, and I said, if that is the case, then I can never control anything. Then I have no idea who's going to do it, except Gazprom. So I decided to stay away. And finally, there is a question of timing. Now, once in a while, all these three come together. That you're talking about a good company that is a very good company, that you understand not just the company, but the sector, and the timing is right. And when they come together, then that's a golden moment, and you should just go and buy it. So, that's how I kind of think about it. I think personally, some of the China stocks, and I know I'm not talking about international at the moment, but just look at what's happening globally. China has cracked down on its internet technology companies. Every company, including Tencent, Alibaba, everything is down. Now, question is, A, do you understand what those companies do? Probably do. Do you understand what the Chinese government is doing? Probably don't. Pata nahi kya karte hain. And the question is, will they keep doing it forever? And if they don't, then at some point, these stocks are going to bounce back. They are giant-sized companies. They have millions, hundreds of millions of users. And if you believe in that kind of future, then there's every reason to be invested in China. And now is a very good time. So again, I can't, it depends what you think. So I hope you get a sense of what I mean when I say good company, good understanding, and good timing. Yeah. So let's move forward. How do we start? So very simple, find good companies, get comfortable with what they do, wait for the right time, buy, wait for the right time, and sell. Very easy to say, very hard to do in practice. Okay. Now, InvestorAi can help you. It cannot substitute judgment for you. It will not tell you. That's why we never give advice. We are not advisors. You want advice? Go to IFA. Yeah, there are enough people wanting to give you advice and charging you lots of money for it. Our philosophy is we are giving you information. We never want to give advice, and therefore our fees are, very, very small, and they will remain that way, I think, for the next foreseeable future. The one thing that I have said time and again, that your own market view and judgment are super, super important. And it's you plus AI that is this investment superpower. You've seen the movie Iron Man. you think of Tony Stark, and he invents this energy source which is embedded in his chest and powers his heart. And then he invents the suit that is powered by the thing. And the suit helps him to fly. But if he's not inside, the suit is not going nowhere. It's going to lie there on the shelf. On his own, he can't do anything. But he can't fly. But you put the two things together, then it begins. It allows him to do things that are, quite fantastic. Now, that is a comic book example, but it is actually right in real life. Technology is an enabler. All this, evil view of AI that it is, achieve singularity and achieve sentience and make its own decisions and go out and kill humanity like the Terminator. I don't think that is the right view. I don't think that's going to happen. So my view is not the Terminator view of Cyberdyne coming in, taking over humanity. My view is more the Iron Man part. And I think you and AI, together form the superpower. That's very, very important. Now, the other thing to remember, that time is very, very important. Now, the subject of the webinar is a bull market. The question is, are we in a bull market now? Okay. And I don't know what you feel. You could feel we are, you could feel we are not. But if you take a longer term view, and if you take a view that the Indian economy is going to continue to grow for the foreseeable future, never mind at what rate, okay, then all you have to do is look back. Sensex has grown 17%. This is data from Live Mint. 17% per annum for nearly 40 years. Now, some years it has gone up, some years it has gone down. But if you had invested 1 lakh in 1980 and forgotten about it till today, you'd have 5.4 crores in the bank. By doing nothing, बीच में कुछ नहीं करने का. 1 लाख 40 साल पहले डाला, and now just let it go on the index, not even picking any stocks. So, I think we are all in a unique position in India, where we have a very large economy that is growing. There are parts of the economy that are, frankly, quite depressing and need a lot of effort. But there are parts of the economy that are, fantastic and hugely energizing. The consumption is, with so many people, consumption has to grow. And if consumption grows, I cannot see how the industry will not grow. So anyway, again, I'm sort of speaking my views. You have to form your own view. I doubt if anybody here is a bear on the Indian economy in the longer term. There, of course, are short-term opportunities. But this is a very important thing to bear in mind. I don't know how old you are. If you're somewhere around 25, 30 or thereabouts, you have at least 40 years ahead of you. Start investing now. Never mind how much you put 10,000 rupees if that you don't have more money. Put any amount of money. But this is where the discipline comes in, that please stay invested, because that is what will give you the returns. And in long-term returns, there are two notions. One is the return itself, whether you made 7%, 8%, 10%. And the second is the compounding of returns. And the longer time frame you have, the compounding of returns is even more effective than just the returns themselves. I would rather have annual compounding at 7% than volatile returns at 15%. Just do the arithmetic and you will see over 20, 30 years what powerful impact it has. Now, if you're not 30 years old, let us say you're 50, 55 years old, today's life expectancy is easily 85, 90 or more. Even you at 50 have for 30, 40 years. Okay, now you may not want to be in a accumulation mode. You might be in a consolidation mode as you get older, and you might want to spend the money you've made, but you still have time. So don't feel that if you just because you're older, short-term ups and downs is the only thing you have. Okay, so I want to now move into InvestorAi, talk about value investing, Alpha 330, swing trades, play, and active monitoring. Some of you are familiar with InvestorAi, some of you are not. So we will see that. How do our algos work? They identify potential breakout ideas with the highest levels of accuracy that we can find. They're all machine learning models. There's no human intervention. They are machine learning models that use some of the best data sources in the world. We analyze 600 pieces of data every day, both technical and fundamental, for every security in every market, every day. We perform about 800 million calculations every morning before we publish our signals. One thing to remember, the market is the market. Okay, it will go up and it will go down, and you will not always make money. The only thing I can say to you, a little poster from Second World War, which the Queen issued, saying, "We keep calm and carry on." That is truly the best advice I could give you. Okay, and lastly, we have two products, InvestorAi and FTM portfolios. Both are different, both serve different purposes. If you have the time and you have the expertise, InvestorAi is the way to go. You can decide individually. If you have the time, and you don't have so much expertise, then please try our FTM portfolios. They are ready-made model portfolios that you can just copy. Okay, we don't charge for advice because we're not giving you advice. We don't charge you for PMS fees because we're not managing your portfolio. The machine is creating a portfolio and showing it to you. FTM stands for follow the machine. Just go to the InvestorAi website and you will find. If you have the expertise but don't have the time, there is a very interesting thing that's coming soon. I think what you will see in the next 3 months, we're going to be improving InvestorAi very significantly. We're going to be adding a portfolio module literally in a few weeks, so you can input your own portfolio and be able to, see values on that and ideas on that. Okay, so I'm going to stop here. And Shruti, do you have any things to share?
Yes, there are questions. But Akshaya, would you like to run 1 or 2 polls? Because, you'll get a sense of how many of them are, tried InvestorAi or not. Akshay?
There, can you put up a question as to
Yes.
how people are using InvestorAi? Oh, okay, it's there. Okay. So it's about 70-30, 60-40.
I think 60-40, yeah.
Okay, thank you. That's useful.
Akshay, I think we're losing you a little bit. Akshay, are you there?
Yeah, I'm here. My screen?
Yes, we can.
Yes, okay. So, guys, let me take you to InvestorAi. When you launch you come on the home page. We've added this search stocks feature recently. You can put in any name. Let's say I want to say Reliance, and you can get Reliance Industries, and it tells you how the stock has done versus the index in the last 3 months. It tells you if there are any active insights. It tells you whether there are any past insights, and there are 2 past insights, one on swing trades in 7th of December and 12th of Alpha 330 in May of this year. So it tells you in the last 12 months, has anything come? It shows you any similar stocks, and there are different insights, and then it tells you how Reliance compares with the market. And then you will see ideas for you. There are 3-day ideas, which are swing trades, 30-day ideas, which are Alpha 330, 90-day ideas, which is value investing. There's your watch list stocks you can add. There's the add button. You can create it anytime. These are all the stocks I'm monitoring. The dark circle with a tick suggests that there is an insight I have not read. And the unshaded circles means there is an insight on the stock. I can monitor ETFs. I can monitor baskets. There are some quick links. And then there are links to our community and webinar. So that's really your homepage. Before you start, top right-hand corner, three bars, menu, and go to preferences. Make sure you've selected the right markets. For today, I have selected only India. Make sure that you've selected the right sectors. I've just selected a few sectors at random, not at random, but what I like to track. And you can do your own thing. So if I go back to, let me show you Play first. So Play is a very interesting algorithm. It allows you to compare one company with another. So let us say you want to add, IT sector to your portfolio. Now you don't know which company to add. So I say, okay, let me see how Infosys does. So I pick Infosys, and now it is showing me a comparison of Infosys with the Sensex. So the blue shape is Infosys, the gray shape is the Sensex. And as you can see, Infosys is much better on maximum drawdown, which is volatility. It is much better on capital structure, with a lot of cash. On the balance sheet, the consensus view of analysts is much better than the market. But the market is better on future outlook. The market is better on valuation, which means that Infosys is a more expensive stock than market, but we know that. And this is all the scores you can see. Now, this is Infosys. Now you can say, okay, should I buy Infosys or should I buy TCS? So then you go to competitor. And now let us put Tata Consultancy, TCS, Tata Consultancy Services. And now you can see the blue shape is still Infosys and the gray shape is TCS. This is telling me that analysts like Infosys much better than TCS. And historic performance, Infosys a little bit better. And on future outlook, they're about the same. And compared to TCS, Infosys is a cheaper stock. So between these two, I would buy Infosys rather than TCS. Okay, just looking at this picture. Okay, if you don't understand it, just post a question and I will look at it. Now I can say, okay, but what about HCL? Should I buy HCL? And I can put in HCL Technologies. And now it is very, very similar. So HCL and Infosys, not much to choose from. Infosys is slightly more expensive than HCL in relative terms, but I could buy either of them. So this is a very easy and a quick visual way to just compare two stocks and understand what's going on. Now, let me show you value investing. This is the tile on the top left corner, and it shows you good stocks that are temporarily undervalued. Okay, so what is a good stock? What is temporarily undervalued? What does all that mean? So let's go in here. Now, so you'll see a bunch of signals in the sectors that I have selected. There are 11 signals, and I can sort them if I want. I can sort them in order of returns, and now you can see it just rearranged itself. So let me just take one. I think auto sector, Excite Industries. Now, this is telling me that there are three, on top you will see the name and the details of the last traded price. Then you will see three boxes. One is called valuation, one is called sector rank, and one is called backtesting. Let me just talk about valuation. So valuation is anything below the 20th percentile of its valuation in the last 10 years compared to the market, we consider undervalued. So today, Excite Industries is trading at 18th percentile. The signal came up on the 13th of August when the price was 166 rupees, and that was at 11th percentile. So, it has gone up, and it has generated 11% since the time we have, and 11% since 13th of August. So that's a very, very, very good return. And if you scroll up, it will show you how the relative valuation has moved in the last 1 year. Okay, so this tells you it is an undervalued stock. Now, if at any time you don't understand, if you want to understand something more, if you see a question mark in a circle, just tap on that and it will show you what the screen is telling you. So you'll see these question marks all over the place. They are all contextual inputs, so you can click on it and it will talk about that particular screen. And I will show you more.
Actually, what does threshold mean? We just got in a question
yes.
because you're on.
Good question. Threshold is the 20th percentile. So as the algo, we have taken the view that anything below 20th percentile is undervalued. Now you could say, why 20th, why not 30th, why not 35th? So look, judgmental. So we have just taken 20th. So the dotted line in the chart that you see is the 20th percentile. Anything to the left is undervalued. Anything to the right is not overvalued, but not undervalued. Okay. So now let us. So now we have seen it's an undervalued company. The question is it a good company? Or if I'm buying this, am I catching a falling knife? So the sector rank is what we use to show you whether it's a good company or not. What we do is we calculate a comparative rank within the sector for all companies in the sector every day. And then we show it to you. So the overall rank is 53rd percentile, which is sort of middle of the road. It's not great, but it's not bad either. And the factors that we use to derive the rank is, one is capital structure, which is very good here. Second is consensus view, which is sort of borderline very good, but valuation is sort of okay because the price has now gone up. So valuation, it scores a little lower, and future outlook is not great. Okay, so this is what the market is telling. Now, at any time you could say, fine, how do I do more research on the company? If you see at the bottom row, you will see live info. Okay, the binoculars. If you click on live info, you will immediately go to Google Finance pages, and you're on the internet. You can search, you can look at recent news articles on the company and any other research that you want. Okay, and you're still in the app, so all you have to do is press back and it will bring you back. Okay, and so this is how the sector ranks. And again, I showed you the question mark. Now, if I click on the question mark, I will see a completely different content, which is relevant to the page you're on. Finally, okay, so we say it's an undervalued company, it's a good company, but will I make money on it? Has it happened in the past, and how quickly has the price bounced back? And this is what we call back testing. So it tells me that it has breached the 20th percentile 4 times in the last 2 years. And if you had bought every time, in 3 months, you would have made 4.5%. Okay, so the price does bounce back, but it takes 3 to 3 months. 1 month, it will not bounce back so quickly. That is what the past is telling us. And you can see the times when it has gone. So it stays low, but it does come back over a 3-month time period. So now you can decide whether you wish to buy or not. If you want to buy, there is a trade button on the left-hand side in the bottom bar. I hope you can see that. If you buy on it, it will then take you to your broker account. And if you have an account with any one of these brokers, 5paisa, Angel, Axis Direct, Grow, HDFC, IFL, Kotak, Upstocks, Zerodha, or Trustline, Motilal Oswal, and Edelweiss, then you will be able to trade directly. Once you set up your account, then it is one-click transition, and it is very, very easy to do. You can always, of course, go outside the app and trade it, but this is what you can do within InvestorAi. Okay, so that is value investing. By the way, I should show you one other thing on value investing. You will always be able to see accuracy. There's a bullseye button on the top. If you click on that, you will be able to see the accuracy numbers it's running at. So that's just a very useful piece of information. Now I want to show you Alpha 330. And Alpha 330 it has many more signals because it's a shorter term 30-day algo. And all you have to click on is more, and you'll see lots. So I have a whole bunch of signals. And again, I can sort them by returns like I did last time. And it shows me a number. Now you'll see some tiles that are white, some are blue. So Alpha 330 generates a signal on day 1. It keeps the signal open for 30 days because it's a 30-day algo. But in between the day 1 and day 30, the signal will go up and down. On some days it is high, on some days it is not high. Not high does not mean it's a sell, necessarily a sell signal. It is just not high on that date. Okay, so if it is blue, the signal is high. If it is white, the signal is not high. Okay, that is how you should think about it. So let us take ONGC, which is the first one. And ONGC, this is telling me that the signal currently is low, so it's not high. And the algo has identified ONGC as a stock that has a high probability. It identified on 21st of September. Okay, so about 2 weeks ago. Since inception, which means since 21st of September, the price of ONGC has gone up 19%. So if you had bought it on the day the signal came up, you would have made 19% in 2 weeks. This is a very powerful algo. Okay? We keep it open for 30 days, so it's got 13 more days to go. And currently, the signal is low. We've had the last 2 instances in the last 1 year are shown here. And both time it has beaten the index in 30 days, once by a small margin, once by a very big margin. And here is how the signal strength has moved over the last 30 days. There is one stock that is similar to ONGC, which is Hindustan Petroleum, on which there is also a stock, also a signal. Hindustan Petroleum has got up 9.1%. It was generated on the 28th of September, so it's 1 week ago, a little more than a week ago, and ONGC was on 21st September. So it shows you what all is there in the system that is similar to ONGC if you don't want to buy ONGC. And finally, on the snapshot, it tells you what the company is all about. It's in the energy sector, large cap, 1 year performance is fantastic. And the volatility beta is roughly equal to market. So it's a good stock, I mean, I wish I had bought it on 21st of September. Again, live info is available. You can go and check it out at any time. So that's Alpha 330. I'm conscious of time, so I'm going to move a little faster.
Yeah, and we have a lot of questions today, Akshay. So yeah.
So swing trades is a 3-day algo. It's only available for India. You can look at open ideas, and then it shows you. And each day is a 3-day algo. You'll get long ideas, and sometimes you'll get short ideas as well. Anyway, what I do want to show you is active monitoring, and that is very, very valuable. So if you press on monitor, the button at the bottom, you can select any stock that you like. So let's say take HDFC. HDFC Life. Okay. Now you can set your profit limits and the loss limits. My profit limit is 3%. My stop loss limit is 0.5%. And then I can say, okay, monitor now. So now it goes into my actively monitored watch list stocks. When I go to my home page, you can see my watch list, and you will see HDFC Bank as in my life in my short list. So I go into it, I click on it, and then it shows me how the stock has moved since I started monitoring it just today. It tells me any current stocks, it shows me past insights, and shows me similar stocks. And then it gives me a comparison against the market. So I find active monitoring really useful when I want to track a stock. I'm not ready to buy. I just want to track it. I can do it from the bottom. I can even say add here, and it takes me to the same screen. So there are many ways you can do the same thing. So conscious of questions and time, let me stop here.
I'm going to first, Akshay, start with Prerna's question, because that's the last one that's come in. She says, does it show how a stock is likely to perform in the future?
So Prerna, the only signal you have about likely to perform in the future is when the machine generates a signal. Okay, and you will find it under either value investing, or you will find it under Alpha 330. But when you monitor the stock, it will tell you when there is a signal. Okay, so it won't tell you as of now. If there's no signal, then it just won't show a signal. When there is a signal, you will see in your active monitoring section in terms of current insights and past insights and similar insights. All those are signals that you will find quite useful.
Okay, thank you, Akshay. Rajat, we will come back to your question, because it's a slightly broader one around how beginners should do their investment, Akshay, and what resources they can look at. But we had some specific ones, Akshay, around the chart and value investing and colors of different stocks. So Akshay, so the question is on the value investing graph itself, we answered the threshold one, but the other question that came in there was, why were some of our stocks in different colors? That was one. Yeah.
So color, let me explain the colors. I did explain it when I was talking about Alpha 330. A blue tile, blue square, means that the signal is high. A white square means the signal is not high. Not high and low are not the same thing. Okay, but it's just not high at the moment. As I told you, signals are recalculated every day, signal strengths or probabilities. And if today the probability is low, does not necessarily mean tomorrow it will be low also. Just because today the probability is high and we show it in blue doesn't mean tomorrow it will be in blue. Okay, so it changes every day based on end of day prices. We are just showing you the current version of this thing. Now, and you could say that, but that doesn't help me, but what should I do? Now, remember, we are not here to give you advice. We're not here to tell you what you should do. You are there to decide what you should do. We are only telling you what is happening today. If you don't have any view of the company, then blue or white has no meaning for you. Please don't buy. Okay, you have to have your own view of the company. If you have a view on the company and the signal is high, that is a meeting of minds. Okay, so without having a view of the company, it is very difficult for me to tell you anything more, because the only thing I will say, you don't have a view, stay out.
Okay. Raju, I hope that was helpful. And as you come in for more sessions and, you keep seeing Akshay talk about, how to identify companies and how to think about, what kind of research to do, I think that will get better. Akshay, on value investing, the other question is, this was from Amit and Milind. I'm just going to make it a combined question. If the threshold crosses 20th percentile, do we need to exit the stock? That is what Amit asks. And similar question, Milind says, in value investing, please let us know when to sell. So it's kind of a similar question.
Yeah, so, Amit, I hesitate a little bit about giving a sell signal because, again, a sell signal can be construed as advice. Okay, and so there's a little bit of, that kind of thinking behind it. We don't want to give that kind of thing. But you're right, a lot of people have asked, can you tell us when to sell? So we are looking at some way of addressing that. And in the next 4 to 6 weeks, you will see some of these algo pages changing. We are bringing in a lot of new thinking and a lot of new. So yes, we will show you some surrogate of that will give you a signal, but it may be a good idea to sell. Now, the other part of the question is what happens if the current valuation is above the threshold, i.e. above 20th percentile. So the whole idea behind the algo, so it follows something called a mean reversion theory, okay, in mathematics, that if a price drifts away from the mean, it will bounce back, or it will tend to bounce back over time. Either way, if it goes this way or that way, it will tend to bounce back. Now, by identifying below 20th percentile, we are identifying stocks that have drifted away from the mean. And they will tend to bounce back. Okay, and the back testing section is intended to tell you how quickly it bounces back. Now, if it has already gone beyond to the right of the threshold, which is 20th, 30th, 40th percentile, then chances are it has bounced back or it is beginning to bounce back and you won't make too much money. So it is definitely not a time to buy. Now, whether it is a time to sell depends at what price you bought it. If you're making money, my suggestion is if you're making money and it is not one of those hold forever stocks for you, then you should sell it. Book your profits here. There'll be other opportunities after that. So, so that is how I would think about it.
Okay. Akshay, on play, we have a couple of questions. So it says, Ajay says, under the comparison chart, AI shows the stock is cheaper if the valuation coverage is less, or is it more?
So the way the picture is constructed, Ajay, is we take each one of the 6 variables. We can normalize everything to a 0 to 20 scale, where 20 is good and 0 is bad. Okay, so larger the coverage, the better it is. So on the valuation axis, if you see right to the edge and the score is 20, which means it is a much cheaper stock than the market. Now, it doesn't mean it's a cheap stock by itself. It is cheaper with comparison to the market. That is how you should think about it. Okay, but generally speaking, larger the shape, the better it is. So the closer the shape is to the edge, the better you are on that attribute. And valuation is a little bit inverted thinking, because it is the larger the figure, the cheaper the stock in relative terms. So just remember that.
Okay, couple of questions, Akshay, I think we need to cover is what all does InvestorAi actually cover. So I have Ullas who's asked us, does InvestorAi do or identify intraday trades? And we also have someone asking, how do we do option trading accurately?
Okay, so as of now, Ullas, no, we don't do intraday trades, but we intend to do it. I'm hopeful that before the year is over, we will be able to offer you intraday signals. Those will be super, super powerful. So I'm actually very excited about the intraday trading part of it. We are working on it. There are all kinds of little issues that we have to address, but it's very much in the works and will be available soon. As of now, it's not available. On option trading, again, very much part of our product roadmap. You're not going to see it this side of 2021. You will probably see it in 2022.
Okay. Akshay, one from, and I see Samantha telling us intraday, yay, awesome, whenever it's here. Okay. We have Sajid. So Akshay, Sajid's question is, how much of total capital should one invest in a single stock? And I think the follow-up question to that is, for someone who's a beginner, how should they just think about going about investing in stocks, and what kind of material do they have to learn? What resources can they go to?
Yeah. So if you're a first-time investor, let me take the second one first. If you're a first-time investor, then your priority is to learn. Okay. Now you can learn in many ways. You can learn by doing, and to me that is a very effective way of learning, because you will make mistakes, and mistakes will teach you more than successes. So please make mistakes. You will learn more from them. You will also learn from your friends. So please look out for your friends and colleagues who are investors. Talk to them. Nothing like experience and learning from other people's mistakes. That is even better than learning from your mistakes. Find people who invest. Actively look out for like-minded people, communities. Thirdly, read the papers, because what is happening in the papers is very, really what is happening in the market. So read the financial press. New people may not understand some of the terminology. Ask questions. Okay. Fourthly, come to sessions like this. The InvestorAi webinars, we have them every Saturday, and it's 1 hour of your day, and it's not a massive investment in time. It is very useful, because you may not learn with every sort of incident, but you will learn by hearing other people's questions, other people's problems, and so on and so forth. And and talk to us. We have a line called support@bridgeweave.com. Talk to us and write to us. Finally, we have a wealth of webinars, previous webinars, videos on specific things. They're all on our YouTube channel. You can access it directly from InvestorAi. If you go to the homepage, scroll to the bottom, you will see our webinar archive. Just go to the webinar archive. There are at least 50, 60 videos, if not more, on various topics, and that will help you learn. You have to invest the time. It's not like you go to sleep one night and get up knowledgeable. That doesn't happen. You have to invest the time and learn, and then start small. And I will say the same thing to the other person who asked about how much to invest in single stocks. until you're confident, don't make big investments, guys. Don't put in too much money. Just put money that you can afford to lose. Now, chances are you will not lose all your money, but it's not nice to make losses and things like that. I'd rather have you make some profits, some losses, and that's really how you will learn. So if you're starting small and you're not confident, your own asset allocation is very important. And when you're starting out, your allocation basically cash, funds, and equities. When you have a little more money, it may be cash, real estate, and market assets. A lot of people, are getting out of funds because of the fees. The fees are really expensive. If you have the time to invest in monitoring stocks, I would urge you to investigate, because you will learn and you'll have a lot of fun, and you won't be paying any fees to anyone, and you will end up making, hopefully, a bit more money. But start small. You must not lie awake at night worrying about your portfolio. That is not a good place to be in.
Akshay, I'm just going to take the last two questions because I'm taking one which is a very difficult one, but I think we should take it because I think it's more about a beginner understanding the app. So Guru Raj has a question for us. I am a beginner and seem to have made only mistakes from the time I have subscribed to AI. What do I do?
Well, at least you have learned, I hope. Look, I'm sorry that all that you have done has turned out to be a mistake. I don't quite know how to answer that because I don't have enough information. But Guru Raj, did you invest in stocks where you were confident that you knew the company and it is a good company? Did your own analysis support what InvestorAi was telling you? If InvestorAi was telling you to invest, see, if InvestorAi is telling you to invest, and you go to live info and current price is 300 rupees and 52-week high is 329 rupees, then what you're really saying is that stock is at its peak and it is going to go up. I would be very careful in those kind of scenarios. So without knowing a lot about what exactly you invested in and why, all I can advise you or say to you is, please look at every stock, do your own research to supplement what InvestorAi is saying. And then if you feel confident, go ahead and make the investment. And I hope that over time, numbers will work in your favor.
Great. Thanks, Akshay. Akshay, we have a lot of questions on technicals, fundamentals. What do we cover? But I think, we are running out of time, and lots of questions on FTM came where people wanted to subscribe or understand that better. So just on that one, we will always do a separate session when it's about FTM. So Akshay, unless you want to add something.
No, FTM, please go to InvestorAi website. You will see a section called FTM. And on that page, there is a button called Find Out More. Please click on that, and it will take you to the FTM portfolios themselves. And you will be able to subscribe. You'll be able to learn more about the portfolios, and you'll be able to do whatever it is that you want to do. FTM, in my view, is a very powerful notion. And it is for the longer term investor. FTM is not a 1-week hero. Okay, you may lose money if you do that, but FTM is about compounding of returns. And as I said, compounding of returns is even more important than the returns themselves. Okay? What FTM does is put you in a portfolio with periodic adjustments to the portfolio, but essentially it is intended for you to be in the market in an intelligent way over the longer term. Okay? So let me stop here.
Yeah. So Akshay, So we're done. Everyone, we have a fantastic offer running, 15% off on monthly, on quarterly, and on annual. And we have a community. Please come in there. Ask all your questions as you're using the app. You have questions. Put it on the community. There are people who've used the app. There, all of us are there. We'd love to, answer and help you then and there. And of course, you can write into support to reach community. What you need to do is on your app, right below on the home page on the right hand side is the community button. Very easy to come in. So we'd love to see you all there. And can we get the slide up, please? So these are the numbers. It's a price of a Swiggy order or less than that for monthly. Try it. Try us. Hope all of you will download, and there's a 15-day free trial. A lot of messaging that comes in on how to use the app. I saw many of you come in a little late to this session. So what happened is Akshay was walking through the screens of the app and and how to go about it. If you do come in for the webinars regularly, you will know how to use the app, and and then your whole knowledge increases, and you'll get to what your goals are. So hope to see you all next week. Another very interesting session, and you will get an email about that. So follow us. We're on all the social channels, Instagram, Facebook, LinkedIn. So follow us, and we'll see you next week. So thank you so much, everyone. Bye-bye.